Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today all of this stuff right here is Bitcoin news. This is PPI, I want to be talking a bit about that. Then the rest of this is kind of going to be what to expect over the next week, whether or not we can expect to confirm a bear market rally that we just had in the stock market, or whether or not it's likely that we can actually see a melt up. And then I also want to talk a bit about Bitcoin in terms of its price action and relate its price action to the S&P 500. Is it possible that we've just seen Bitcoin decouple? Is it possible that Bitcoin is going to play catch up? Or is it possible that the stock market could complete this melt up and just leave Bitcoin and crypto behind? Is that a scenario? Does the money exit here and flow into Bitcoin? So that's the sort of thing I'm going to be talking about today. If that sounds like something you're interested in, then sit back, relax, hit that like button, and let's get into this. The Bitcoin mining industry, its power consumption is expected to double this year, according to the Russian Ministry of Energy. So as you can see, Russia is continuing to pour investment, pour capex into the Bitcoin network and the mining industry. And as a result, the mining industry continues to thrive. Kathy Wood is telling us that we need a Bitcoin ETF. It would have saved a lot of people from the FTX collapse. I'm not so sure if I agree with this. I guess the argument she's making is that if people had exposure to Bitcoin via an ETF, then they wouldn't have lost money in the FTX collapse, maybe. But I'm pretty sure the FTX collapse was orchestrated from the very beginning and would have collapsed and hurt a lot of people along the way, no matter what. The government is baffled by the completely unexplainable increase in $599 Venmo transactions. So this is just another piece of evidence and another piece of supporting data. And this is another reason why I simply cannot take any banned threats seriously. I don't take this whole notion that you can ban Bitcoin or whatever is just silly. Look, humans are humans, okay? They made it so that any transaction over $600 on Venmo had to be reported to the government. Then the government were going to scrutinize this. And what happens? $599 transactions just skyrocket. Humans will always find a way to transact. They'll always find a way to beat the system, okay? And then they'll share that way to beat the system with each other so that stuff like this happens. And this is why I'm so confident that even if governments do ban Bitcoin or crypto, you know, people are still going to use it, just like Nigeria, okay? Just like China. You cannot stop the people doing what the people want to do. Check out this interesting Google search trend, okay? Buy stocks in blue here. Buy Bitcoin is overtaking stocks, has just overtaken stocks quite significantly. Are we about to see Bitcoin catch up to the stock market? We'll get into that a little bit later on in the video. I thought this was quite funny. Vegas has just released the odds for the next crypto exchange to file for bankruptcy. So you can see here, we've got a list of exchanges. They think Coinbase is the safest, even safer than Binance. I have to agree with this because they partnered with BlackRock, and BlackRock do indeed rule the world. Crypto.com coming in at just plus 200, so they obviously think this is the most likely exchange to collapse next. And speaking of Crypto.com, Bitcoin's reserve is collateralized 102%, according to an audit. So is there really any threat of this exchange going down? I don't know, but as with all exchanges, do not keep any of your crypto on exchanges. Take true ownership and use a cold wallet. The European Union has put a €10,000 limit on cash payments. Transactions over €1,000 in crypto will be scrutinized as per their new regulation. Again, this is kind of the same as that Venmo thing, isn't it? I wonder how many €9,999 transactions are about to occur now. Okay, I wonder how many extra coin mixing things are going to start to happen in order to get around this sort of scrutiny. I wonder if privacy coins are going to take off. No matter what, as I said earlier, humans will always find a way to get around the system. Here in the UK, our economic chief wants investment into cryptocurrency businesses, so this is much more of an encouraging look. Greta and the WEF dreams are becoming a reality as millions cannot afford to heat their homes and the UK faces an Arctic snap. And speaking of the WEF, they liked FTX, remember. They also like Ethereum. They do not like Bitcoin. The end. Need I say more? So, of course, this week just gone, we saw the US core PPI come in at 6.2%, which was above the forecast. And of course, this always scares retail. They don't like to see things like that because the headlines in the media start to read, PPI higher than expected. Oh no, how bad, how bad. But this is what really matters. We came in at 6.2%, which was below the prior month at 6.7%. This is what really matters. For you visual learners out there, here's what it looks like visualized, okay? This is a clear trend of PPI coming down. The fact is The commodity PPI has rolled over hard. Note in the past how previous big spikes and then hard reversals have ended in a recession. So does that mean a recession is around the corner? Yes, I think so. If you've seen my melt up chart before, then you'll know that I don't think it's too far away. But at first, I think we've got a melt up to complete. We'll get to the charts momentarily. As I said earlier, they only read the headline figures and not the actual report, okay? PPI has decelerated dramatically. So whilst retail is out there scared because it's above forecast, they're missing the point. PPI decelerated dramatically. A large number of components now are in negative month-over-month territory. This is disinflation. The liquidity controllers, aka the bond market, are not going to be fooled by a surge in a vegetable component. And so you can see here, again, this speaks to having already seen the top in inflation. Of course, CPI will need to confirm this on Wednesday, but if we get a continuation of this trend and CPI starts to look just like this as well, then you better believe this melt-up is going to validate quickly. The big question on most investors' mind is the S&P and the stock market in a 2009 or a 2008 scenario? As you can see, most people think 2008. I think we're in a 2009 situation. In case you don't know the difference between the fractals, here's 2008, where we're about to plunge down another 50-odd%, and here is 2009, where as you can see, we're going to recover. I actually think we're going to recover much, much, much quicker than the 2009 fractal. I'm not championing this 2008 fractal at the moment. Of course, I'll be open to being proven wrong if the CPI data and the rate hikes confirm. The Dow Jones, however, continues to be bullish. RSI momentum is increasing. Weekly support has held up. The price is broken above a declining trendline on a weekly basis. Unless the Fed ruins the party, technically we expect higher highs. And that's absolutely right. If you ignore the narrative, if you ignore the Fed, if you ignore all of that and just trade the chart, this is a breakout. At the same time, the Nifty 50, I've shown this multiple times, look at it go. It's at all-time highs. The same is true of the FTSE 100. It's very nearly about to take out its all-time highs. This is not the sort of thing you see in a bear market rally. Everyone is buying puts the same way the institutions bought into SBF. What could possibly go wrong? Nasdaq and long-term treasuries are correlated since the start of the year. Every time there was a decoupling, the triple Qs came right back up. This time is not different. Risk assets will rally and rally hard towards the end of the year, and this includes Bitcoin, according to James. So you can see here we've had a decoupling, but whenever this has happened, we have snapped back for tech. Remember, a weakening junk bond market always precedes stock market collapses, but at the moment, junk bonds are rallying, and the spread between the treasuries and the junk debt are narrowing. This is the complete opposite of a risk-off look. We should expect this melt-up to confirm. Further evidence to support this is there is a death cross approaching on the VIX. If I zoom in here, you can see if this death cross confirms, we should expect much, much, much more suppression on the volatility, the fear gauge. And why would we get volatility compression here? Because we could possibly be entering this melt-up phase in the markets. To be clear here, I'm not telling you to go and buy stocks. I'm not telling you to do anything. I'm simply pointing at data and saying this is what I expect. S&P 500 corporate insider selling is at the lowest level since 2010. So again, max pain remains to the upside here. Yields are setting the stage for a sharp decline to 3%, as you can see here. Again, not something you see in a risk-off environment. And so there are a few questions here. First question is, can this melt up invalidate this week? And the answer to that, of course, is yes. If we get a hot CPI print, if the Fed does not raise by 50, but instead 75, we're going to see this roll over, and this melt-up is not really going to look anything like I've drawn here. The second question is, what would it take to confirm this melt-up? Well, it would take a 50 basis point hike and a lower CPI print, just like with the PPI trend that I showed you earlier, and this would indeed start to validate this melt-up. The next question is, can crypto catch up? Can crypto snap back up to here as this melt-up confirms? Or has this completely decoupled? You can see that these were more or less correlated at the time. Not a strong correlation in my personal opinion, but typically when the S&P moved down, Bitcoin moved down with it. As you can see here, it moved up as the stock market moved up. It moved down, and then once we got to this low here, the stock market broke away and Bitcoin started to break down. So is it possible that we've just seen Bitcoin decouple here and it's not going to catch back up? Well, yes, that's possible. Is it possible that they're going to blow the top of the stock market off and then exit the money into cryptocurrency? In which case, will Bitcoin just continue to do nothing or to bleed into Q1 of next year until this money comes in? Or, and this is my personal opinion of what is most likely, I think this is lagging. I think tech is lagging. I think the S&P is lagging. And those three things are about to play a massive catch-up role. Now, this is the S&P here. And the reason I say this is lagging, of course, is because the Nifty 50 is at all-time highs. The Dow is just a few percent, say 7% off of its highs. The FTSE 100, as you can see, is only about 3% off of its highs. So the S&P and tech are lagging that, and then Bitcoin is lagging tech and the S&P. But do I think this could play catch-up? Absolutely. Of course, that remains to be seen, and of course we need to see CPI and the 50 basis point hike go in our favour. It's also possible that we see the stock market waddle up here on the good news next week, and Bitcoin just continues to trade sideways into the end of the year, because that is when that cycle low is due for Bitcoin. If I get rid of this, as you can see here. Now, this doesn't have to form all the way down here. It could form up here, as I've shown before. We could break out of here, drop down into that cycle low around the 6th, and then come back. So everything is on the table. But I would like to point out, just while I'm here, that this chart is telling us that we're actually only around $400 away from confirming that Wyckoff Spring schematic that I've been showing over and over again on this channel right here. We're only about $400 away from confirming this, and that is a trigger for a long from me personally. Could this happen on Wednesday or Thursday? Yes, I think so. This is kind of how I see it. I see this final wave 5 completion. This is what I see coming into Q1 of next year if the melt up indeed validates. Alongside this, I think Bitcoin snaps back, recovers this, and we end up looking something like this on the chart. Of course, it's possible that I'm wrong about this, but this is how I see the market unfolding over the next 3 months. Litecoin is apparently telling us the same thing. Okay, Litecoin is leading. As you can see here, same sort of Wyckoff formation that I showed you earlier, except it's breaking out now. It's making its way up. Litecoin has smelt the coffee early, and in my opinion, so has Zcash. Of course, the other idea is that we're just going to look left and repeat this 4-year cycle. 3 years up, 1 year down, 3 years up, 1 year down, 3 years up, 1 year down, 3 years up, 1 year down. Now, is that possible? Of course it is. It's a market, anything can happen. But I have been cautioning against this idea for a long time on this channel. I will continue to caution against this idea until it validates. Okay? If I'm right, then we are just going to melt up pretty soon. And it's going to catch everyone off guard. No one's going to believe it. Many people could end up being locked out of this move because they're waiting for one final dip to 10, 12 or 14k that never comes. Of course, I would much rather this cycle play out. This is what I would rather see. This is really easy to trade because we've seen 3 of them before. Okay, we know exactly what to expect if this is going to play out again. You know, we're right around here, we're right around here, we're right around here, so we know what to expect, okay? We should start to move up and then grind and then go parabolic. We should start to move up and then grind and go parabolic. That would be really easy to spot if that turns out to be true. But just assuming this is 100% going to play out, in my opinion, is a recipe for disaster. Because what if this unfolds? Are you prepared for that scenario? Nobody believes this can happen. I don't even know if it can happen. Okay, I'm a trader. I don't predict. I react, remember. I'm open to being proven wrong, and this would be much easier, and we'll get a higher top, because the longer we go on, the higher we go up. If we do indeed melt up from here, the top is likely going to be capped at 120k. All of this, of course, remains to be seen, but if this is your strategy, I'm looking left and this cycle is going to repeat, and it's just going to repeat forever and ever and ever, just like this, I would strongly caution against that. Also, this is the 4th 4-year cycle. Usually, in the 4th 4-year cycle, you get a cycle that left translates. That means it peaks within the first year and then spends 3 years coming down. Nobody will be prepared for that. Very few people, only experienced traders, will even be considering this. People that have been in the market just a few years are not going to be expecting this left translation and a move down. Prepare for all outcomes. Be open to everything. Have expectations, but not bias. Let's get into some charts for the week ahead. The dollar continues to bleed down. I think it's working on a touch of this blue trend line. If I zoom out, you can see here. So is some sort of rally into next week, into Wednesday and Thursday, the FOMC CPI? Is that possible? Yeah, and then I think it could roll over, or it could just bleed straight down. That remains to be seen. The chart of truth, the US 10-year yield. Again, people see these sorts of candles and they go, oh, that's it, game over. Like, we're rallying. Not necessarily, okay? We're still well contained within this downtrend here. There's nothing to really worry about. If we were to break out of here and then hold and then go, or break out, retest, resumption, then we can start to get concerned. But if this is just going to roll over like I think it is, it could work its way down to 3% by the end of the year, I think. I don't think that's unrealistic. So That remains to be seen. Geo, I did say we might have to widen this box, so hopefully that's the end of the widening. Hopefully we can get some sort of basing come out of here. There's two options here, okay? We can trade the breakout of the box, like the emergence, that means the entry would come here. Or you could also potentially add, since this has formed quite an orderly slope, I may well add the position on a breakout of this trend line for Geo. So that remains to be seen for now. I'll make sure I update you. I'm looking to add and move the whole stop lot up here, so then I'll have twice the exposure, letting the first trade fund the risk for the second trade. So if I do that, I'll update you, but those are my thinkings at the moment. We're either going to consolidate in here for a while and then buy the breakout above the top of this box, or I might buy the breakout of here if we get all of the CPI data that I want to see on Wednesday. Bitcoin, as I said, trying to recover this spring, so not much to do. Where the cycle count, what day are we on? I've got to check for this because 32, we're around the time frame where you'd expect to see a half cycle low. Actually, you'd expect to see a half cycle low at day 30, so I wonder if we're going to sell off sharply into that half cycle low over the next 2 or 3 days, and then we're going to come out of here. So that remains to be seen. I'm not interested in any other crypto trades until we can confirm that spring. I've been saying that over and over again. Still pushing MATIC, as you can see, still pushing Zcash, as you can see. I've still got a gold long, so this is okay. I expect the dollar to continue to be weak. This could well pull back into a Monday, Tuesday, Wednesday. Same is true of silver, but then afterwards I expect them to start attacking much higher numbers, targeting around $29. I'll put this up a bit in the best case scenario for silver. And gold, I think it can make it up to 20 and 50. So again, maybe that's a bit ambitious. That remains to be seen. It might take another daily cycle before this can play out. Quick look at the UKX. Again, you know, we're really not far off these highs, are we? Really not far at all. We've got a little bit of a pullback here, but a break of that should see us push up against new highs and then break out. Dow Jones back to break even, but that's to be expected. Perhaps a touch of this trend line before we can go on Wednesday. Nasdaq holding up relatively well, isn't it? It was just sort of chopping around this level. I could see a little bit of a pullback Monday and Tuesday, and then we could go. The S&P looks like it's going to do exactly what I wanted it to do. So I did say we'll form this low, we'll get a little bounce up, and then hopefully we can come down and undercut that low into the cycle low, maybe Tuesday or Wednesday or even Thursday of next week. So it looks like we're set up for this. How low down it goes, I don't know. I would expect sort of 38.50 at the worst case, but of course I'm never predicting price, only time. But this looks like it would be a really nice setup, and if we can get a swing low confirmation out of there, then I will think about adding a position depending on the data. So again, not a great deal to do until Wednesday and Thursday. Need to see what the Fed is saying, need to see what the data says. The early warning signs are there, are telling us to expect a lower CPI print and a 50 basis point hike. This indeed could validate this melt up. I would not be surprised to see Monday, Tuesday, and even Wednesday sell off sharply, and then we get a turnaround on either Wednesday or Thursday. So be aware of that. If you're bearish and we get a lower CPI print and a 50 basis point hike, then you really need to adjust your positions, okay? And if you're bullish like I am, and we get a 75 basis point hike and a hot CPI print, then you really need to adjust your long positions and start looking for shorts. I will be closing all of my longs if those conditions show up, although I am not expecting those conditions, as I've been saying over and over again. It will be really nice on Wednesday if once we can get through this data, then we can move on to greener pastures. I could stop repeating myself over and over and over again. I could stop talking about this same old thing every day. We will still be heavily focused on this melt up, particularly if the stars align to start confirming this. But it'd be really nice to start trading some cryptocurrency. It'd be really nice to start putting some risk on across the board. Or if it doesn't work out in our favor, then it would be nice to start getting some shorts, because we know we're probably going to go down significantly from here. So if you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, turn those notifications on if you want to see how I deal with these markets in real time as a pro swing trader. In the meantime, enjoy the rest of your Sunday. I'll be back this week with more of the same sort of content, and we'll see if we can get through CPI and the Fed. I'll do a Fed breakdown as well and a CPI breakdown, so stay tuned for that. In the meantime, look after yourselves, take care, all the best from me. Cheers, bye.